Good morning to all. We will start the meeting. So now the market is on a consolidation phase, and we have seen the small cap and mid cap, mainly the small cap index bounced back from the previous low. And another major thing happens is the fall of commodities, mainly the Brent crude. Brent crude went up during the conflict between Israel and Palestine. Then now it has corrected from its recent high of around $95, $97. It is now trading around $80 only. So Q2 results of Indian companies were mixed. Some sectors shown very good result, while others were not as expected. Another major thing happened in the world is the bond yield, US bond yield is cooling. It's went very high, almost 25 years high. Now it's slowly coming down. So these are some of the major things happened in the last month. Upon the results, Nifty has returns. Nifty has corrected around 1.6% from our previous meeting, while Sensex was around down by 2% only. Nifty mid cap was up around 0.6%, almost flat, and BSE small cap was also up by 0.5%. So last 1 month was mainly underperformance of indexed stocks, mainly an IT and HDFC Bank, and mid and small cap rallied from the from previous month. So this is the bond yield. Bond yield has risen up to around 5%, nearly 5%. Now it has fallen about 0.52%, that is 52 basis points. It is now trading around 4.48%. So most of the FIs were investing in US mainly due to this higher bond yield, because they will get around 5% return and no risk in that. So they do not have to take any risk. So most of the FIC who are selling in India were investing in US bond yield. So it is slowly coming down. So another reason why bond is coming down means there is most of the participants are expecting the end of a interest rate hike cycle. So Fed has almost hiked interest rate in the last 2 years, and it is around 5.25 to 5.5% US key interest rates. So now the market participants are expecting this is the end of the rating cycle, but nobody is expecting a cut in the interest rate. That is because US unemployment data is still strong, because it is less than 4% only. During recession time, the US unemployment data may rose more than 5%, around 7 to 8%. But for the last 1 or 2 years, it was around this 4% only, below 4% only. That is why nobody is expecting any cut in the interest rate, but most of them are expecting a status quo or almost end of the rate hike cycle. That is why bond yield is coming down, and the economic data like US unemployment data, employment data still remain good, strong. If you see the this advanced economies GDP to public debt, India remains one of the standout thing, because our public debt is almost equal to our GDP. But if you see the case of European countries like Spain, US, this blue line indicates the public debt, and red line indicates the nominal GDP. If you see the Canada, it is very high than their GDP. The public debt is very high than their GDP, like US also, UK also. Only Germany has almost similar data like India. It is almost equal to the public debt is almost equal to the nominal GDP. So this happens only after 2008. During this 2008, if you see before 2008 data means almost it was equal. So after the 2008 financial crisis, most of the economy were running massive stimulation from the government. So it is mainly run on debt only. So this is one of the features which is stand out to India, because Indian public debt to GDP is almost same. So it is not high as European countries or US. And another thing about the debt is that Indian household debt is almost 37 percentage only, and overall debt is around 173 percentage of this GDP. So if you see, almost in other countries it was around 2.5 or 2.3, or also the public debt is very high. India's major debt come from this government only. So government debt is around 85%, but household debt is 37% only. If you see countries like South Korea, they have public debt of 104%. If you see Australia, their debt is very high. And if you see China also, it's also very high. All debts are very high. But in case of India, main debt comes from the government sector only. And change from 2008 to till date means our household debt has almost come down around 6%, and corporate debts also come down 12%. Only government debt has risen around 11%. So overall, our debt comparing with 2008 means it is around -6 only. It has come down. But if you see other countries like mainland China, it is almost 147% of that. It has 1.5 times of the debt in 2008. Now also, if you see European countries also, it has around multiplied around 1.5 to 1 times, and also Japan, it was almost doubled. So in most other countries, debt has doubled. Now also debt has, you see China data means almost debt is diversified. Household has around 62% of GDP, and corporate 157, and government 70%. So in most sectors like household, corporate, government, all have huge debt. But whereas Indian economy is concerned, only government has debt of almost equal to our GDP. Other debts like household debt, corporate debt, all well below our GDP. So India has a potential to have very high credit growth, and since debt is very low, there is if economy have pickup means there will be a very good credit growth, and the economy have a very good positive impact on the credit growth also. So this is one of the positive data that we have got in recent times. Now also another data comparing with China means China population has coming down from 2020 till now. The China projections for the population is going to come down. The population will come down around 1 billion in less than in next 50 to 75 years means. So that means working population will be less in China, and whereas in our country, the working population will also will increase also. So due to this China population degrowth or coming down, the demand scenario will be less in China. That is why most of the multinational companies and global companies are looking in India as a huge market. China labor cost also has risen from around $2 to $8 per hour now. So even though Indian cost has not risen as much of like that China, our labor cost still remain around $2 only. But due to this shrinking of population and working population mainly, the labor cost in China has gone up significantly in last few years from $2 to $8 in less than 4 or 5 years. Due to these bad futures, or not so much good future in China, most of the foreign companies are now not investing more in China. Foreign companies are nearly not reinvested in China due to these scenarios. So we see means from 2013 to 2022, most of the companies has invested in China around 50 to 75 billion per year. Now they are not reinvesting in China. The reinvestment has come down. most of the companies are exiting in China and investing in other part of the world like India. They are investing. So this China demand has come down drastically in last few years. So can India seize the China plus one opportunity? Even though Indian labor cost is lower than China, our productivity is far less because in order to reach a product to the final customer, so if you produce a car or a bike in the factory, and if that has to reach to the ultimate customer, retail customers. So our infrastructure is not as good as China. Only our infrastructure, due to this less infrastructure, our productivity is very low compared with the China. Even though our cost, we have a cost advantage, our cost efficiency is good. Our final productivity has come down due to our low infrastructure facilities in India. So that is why government is now focusing more on increasing the productivity by increasing the infrastructure. If you see in the last 75 years of Indian independence, India spent almost 14 trillion on infrastructure. But the in the last 9 years, almost the 50% of that has come. The last 9 years, almost $7 trillion dollar has come to the infrastructure development in India. So this is a graph up to 2014 or 2015. For infrastructure spending was very less. So now the government is more concentrated on building highways, like railway lines, logistics park. So the government is mainly focusing on building the infrastructure. So that will boost the productivity and also the efficiency of the economy or industries. So in the last year also, the government theme was mainly on infrastructure and capital spending. Is the main government main focus on railways and roads. This is the amount of money spent in the railways and road. If you take the main heads of capital expenditure, almost 64% of the revenue has gone to this road and highways only. And next major thing is the 64% of the estimate has spent. In previous budgets, there will be they will announce very huge capex, but they will not spend. The spending will be, if you take the final budget, the spending will be around 30 to 40% of the the amount announced in the budget. Now the government is spending almost 60 to 65% of the budget estimate. That means if the government has estimated that they will spend around 100 crore, means they will spend almost 65 to 70 crores for the infrastructure development now. So now the infrastructure development is almost 28 to 30% higher in every year. So government is mainly focusing on two things: road, transport, and highway. That means roadways and railways. You see the budget allocation out of 3,42,000 in 23, almost 1,21,000 has gone for the crore. 1,21,000 crores has gone for the roadways, and almost 88,000 has gone for the railways. So this is the main thing government is focusing on to improve the infrastructure, so that the productivity of the companies and all economy will increase, and it will have a positive impact on the overall economy also. To see the almost Q2 result that has come up to now, the result section was mainly mixed only. The one positive thing is the fall in the raw material prices. The fall in raw material prices have aided the margin of the most of the commodity companies, automobile companies, like that. So they have given a good result mainly due to fall in raw material prices. But the volume growth is muted. That most of the FMC companies like Colgate, Palmolive, Hindustan Unilever, ITC, their volume growth was very low. Dabur, they are indicating a distress in the rural economy. Only the high-end product are selling. So the middle and lower income product are not selling like that. So there is a distress in the rural and semi-urban economy. So the volume growth was muted mainly due to higher inflation. So that is the FMC company has posted some weak results this quarter. Exports also were weak. To take the example of Bajaj Auto, automobile company Bajaj Asia Motor, the exports were very weak, mainly due to slowdown in the global economy. So our domestic economy, rural and semi-urban economy is not growing like urban economy, and also global economy is also on a slowdown path. So these automobile companies, their global exports is weak. PSU banks are showing very good results, mainly due to good asset quality. The NPA level were very low. So due to lower NPA, their provisions were very low. So since the provisions were low, the profit were comparatively higher. So and also net interest margin were good. So mostly PSU bank and also private banks are going very good results. Pharma companies mainly posted very good results, but chemical posted bad performance because the decrease in price of various chemical components. So pharma posted mainly good result due to exports in US and European countries like Cipla, Dr. Reddy. Most of the companies are posted very good results. That is why the most of the pharma companies like Cydus, Dr. Reddy, Cipla all are rallying now. To take the overall performance of Q2 results, comparatively the sales were up by 3.8% only, but profit were up by 47.1%, mainly due to this public sector bank and this raw material decrease in raw material prices. Most of the auto companies are showing very good result, and also banks are going result. Pharma companies are showing very good result. That is why profit has gone up, but sales has not grown up like previous year. In 2022 September quarter, sales growth were around 29%, but now the sales growth were around 4% only, but there is an increase in the profit growth. The overall exports are very weak. If you see, means the overall exports was around 34.47 billion only. So exports are coming down. Exports are growing are around from 30 to 35 billion dollars only. So exports are remain weak for the last 4 or 5 quarters. This is the scenario of the reaction of crude oil prices during previous Israel-Palestine crisis. During the crisis, the crude oil prices were up, but after a few months, the rate came down to the previous level. So now also this 2023 Israel this blue line has shot up, but slowly it is coming down. So only in 2008 scenario, the crude oil went up above $140, mainly due to strong global economy also at that time. So it has come, but most of the times it went up for 2 or 3 months, then it came back to the normal level. Now the war premium or conflict premium has eased, so it has come down to the previous level of around $80 per barrel now. This is a Brent crude chart. It has gone up to 120%, but during this time it was came up to $95 to $97, and now it is trading around $80 only. So which is positive for India, because India, as you know, India is a major exporter of the crude oil. So if anything, if crude goes above $100 mark, it is a high negative for India. But $80 to $85 is $75 to $85 is good for Indian economy. So crude has come down to the levels of 80, which is also a good news for Indian economy. The only negative news is the new project announcement by the government has come down in the previous quarter. So during quarter in the last quarter in last July September quarter, it has come down to 0.3% only. New projects of overall investments. So in previous quarters, it was more than 1 to 2%. Every time they will announce around new projects in every time. But I think due to this election year, they are mainly concentrating on completing the old projects. So they are not announcing any new projects. So since they are completing the old projects, new projects announcement of new projects or new investments has come down below 1%. Another positive thing about Indian economy now is during 2008, when a small FI selling happens, means market will come down. But now, even though the FI has selling in from September or from during September October month, and also November they are also selling. So market has not corrected as much. There are small corrections only. This is mainly due to the investments of domestic institutions. Now the domestic institution through mutual funds, through retail investors become a very heavy force in Indian market. So whenever the FI is selling means almost equal quantity of shares worth of shares are bought by the domestic institution through mutual funds. So our net equity inflow is around 20,000 crore in the last month. During October 2023, almost 19,957 crores has come in net equity inflow. Net equity inflow is around 20,000 crores. So if you see last 1 year from March 21 in the 2001, almost in every month there is a net equity inflows. And if you have our SIP also is growing slowly. The last month it is almost 17,000 crores. It is around 16,900 crores, which is the highest in form of SIP. So SIP is also growing slowly, and say almost 17,000 crores of SIP investment through of equity mutual funds through SIP mode as coming in Indian market. So this is one of the major force which has major force which will balance the FI sellings. So if FI selling means they are buying, and if FI began to buy also buy means the market will surely go up. So due to now the domestic institution are one of the main force in during 2008 when a small corrections, small selling come from FI means the market will come down. Now that is not the scenario due to more mutual funds investments in Indian market. This is the FI investment, foreign portfolio investments in India, which is almost around $14 billion till date. But last few months, September, October, they were selling. But from if you see from April means it's a net inflow of 14.5 billion. In 2023 and 22, they were net sellers. In 2021, they were heavy buyers of around $37 billion, which is highest ever in recent in Indian market. So till date, the net flow is positive only. So after New Year, some of the if I begin to buy means the market will surely go. This is another positive trend in Indian market is the GST collections. GST collection is slowly going up. It has reached the highest level of around 1,72,000 in last month. Generally, April seems to be the highest month every year. So even in this April, it was around 1,87,000 only. But last month it was around 1,72,000, which is the second highest figure after the April. In every April it will be higher, but after April this is the highest level of 1,72,000 crores coming through GST collections. Previous it was around 140 crores, 150 crores. Now it was coming to 170 crores only. November will be also good due to festival sessions. This year the festival session comes later for second half of the October and first half of November. So November GST collections will be also very good. So GST collection is going up, which is also a good news because government is getting lot of revenue through these taxes, so they can invest in various infrastructure projects. So finally, what investors should do means broader market will see a volatility. So there will be up and down on the global scenario, because still the global market is not on a smooth wicket because due to fear of a recession and high interest rate. So there will be some sellings even every now. So Indian market will react to that. So there will be a volatility in Indian market. But there are large number of new investors are coming into the Indian markets. So every time there is a corrections, means they are coming and buying. So it's on supporting the Indian markets also. So be selective in buying mid and small caps because some stocks are going up without any news or any reason. So you should check before buying these mid and small caps whether it's worth buying at this level. So some are going up without any news or any results. So please check before you buy. And still pockets of opportunities are available. So there are a lot of stocks are available at recent valuations, so that you can invest at current levels. So data to watch are foreign portfolio investments and mainly crude oil. Crude oil has come to $80. So it's a very good positive news for the Indian economy. And if it comes down a little more, means it is very good, because now most of the global crude expert are telling that future belongs to green energy only. So the usage of oil will slowly come down, not within 1 year or 2 years. Over a period of time, it will come down. So it will not go beyond a level. So slowly, it's a good news for India also. So you have to watch crude oil prices also. And foreign portfolio investors, whether they are selling or no. Then the ending of the result session. Generally, the result session will end on November 15th. So some 2 or 3 days or 4 days are result are pending. So that are the things you have to watch for the coming days. Now we can see the recommendations. So this time we have given the Muhurta recommendations. There will be a Muhurta trading tomorrow, Sunday, from 6 p.m. to 7:15 p.m. Normal trading hours will be from 6:15 only, 6:15 to 7:15 p.m. So from 6 p.m. To 6:08, there will be a pre-opening session. Like we have a pre-opening session during morning 9 to 9:15. Like that, there will be a pre-opening session from 6 p.m. to 6:15. From 6:15, you can place orders. There will be the orders will the sections will be there from 6:15 to 7:15. So you can participate in that Muhurta trading tomorrow. This is the Muhurta recommendation for this year. The recommendations is for up to next Diwali. So first, we have recommended Dr. Reddy Lab. As I have told earlier, that most of the pharmaceutical company, mainly exporting to US, are showing very good result, because as per report, USA have a very shortage of drugs. So there's a huge opportunity for the generic companies like Dr. Reddy to have very good business in US. So for the last 2 to 3 years, approval, the US FDA approval was very low, very minimum only. Now they are giving more approvals to all companies. So most of the generic companies like Alembic Pharma, Aravindo Pharma, Dr. Reddy, Lupin, Zydus Life Science, they have very good business in US. So they will show very good result in the coming quarters, 1 or 2 quarters. So better you can buy Dr. Reddy Lab at this level around 5,400 and have a target of 6,300. So Dr. Reddy is one of the leading exporters to US. So you can buy at this rate with a target of 6,300. Then next company is L&T. As you know, L&T is one of the blue chip in infrastructure development. So it is slowly coming down because they are getting more and more projects. And now they after India, they are now mainly concentrating on Middle East. Most of the Saudi and other Gulf countries, their L&T is doing various projects. So Gulf Middle East is became the another major ground for L&T. So they are also getting various projects there also. So L&T is as a you can buy as a infrastructure play in India also, and also in Middle East, and also their subsidiary, their group subsidiary companies like IT companies all are doing very good. So you can buy L&T for as an infrastructure player in India, and you can hold it up to 3,450 as a target. You can buy at this level. And next one is Sundara Finance. As you know, Sundara Finance is a South-based, Chennai-based company. They were not aggressive in the previous years. Now that there is a change in management, new MD has come. So now they are more aggressive because in the last result, in the last quarter result, their loan disbursement were very high, more than 35%, around 35% in all the asset classes. Like so, they are growing little more faster now. So there is a chance that their growth rate will be higher in the next years. So there will be a chance for re-rating due to higher growth also. So and also NPA levels are very low in the group, in the company. So you can buy at this level. This quarter result was very good. Another company is Transport Corporation of India. It's one of the major logistics company in India. Now the government is planning major logistics infrastructure like dedicated corridor for the freight corridors like that. And also due to the recent highways, also the logistics sector have a very good future. Most of the companies are trading in very high valuations like delivery like that. So this is Transport Corporation has no debt, and also recent management have a very good management also. Its valuation is only 20 PE. Since most of the other logistics and cargo companies are trading at very high valuations. So you can buy it most probably give very good return in 1 year. Our immediate target is 1,030, and then the next result, if the next result is also good, means it will also go up from there also. So you can buy at this level due to reasonable valuations. And another company is Gujarat State Petronet. As you know, now most of the India is becoming more to the city gas and also utility gas due to the green energy section. So it's one of the company which has a very low PE, around 10 PE only in gas, oil and gas sectors. So it's a dirty. Gujarat State Petronet have no debt also. It's almost nil debt. So it's also have a very good growth prospects. They are expanding to other region also apart from West India. So it's have a good prospect to have a very good growth in the company, revenue growth and profit growth, and you will get a very good return if you invest at this current level. This is the review of our previous Muhurat recommendation. Our Infosys has given, only Infosys has given a negative return due to this slowness of US economy. It has given around -6% only. Almost all company Power Grid has achieved the target and went beyond our target. Cyrus Life also achieved the target, and Federal Bank is quoting near the target. We have given 160. Target is quoting around 150 only. So it's also given around 11% return. Avenue Education also achieved the target. So overall, our performance was around 10.5%. Expression only Infosys have given negative return, but it will go up. You can hold it. Comparatively, Nifty has given also around 11% return. So you can hold these Infosys also, or if you have booked the profit, also it was a very good return for the previous recommendations. So finally, Capstocks wishes a happy and prosperous Diwali, happy investing, and you can also attend tomorrow's